Join me as I dive into the crazy world of SPXS stock and try to figure out what's really happening with it right now. SPXS stock, also known as the Direction Daily S&P 500 Bear 3X shares, is an exchange-traded fund designed to provide 3X inverse exposure to the S&P 500 index. It's a popular instrument among traders and investors looking to bet against the broader market or hedge their portfolios. Given the current market conditions, with inflation concerns, interest rate hikes, and geopolitical tensions, it's no surprise that many are keeping a close eye on SPXS. The central issues currently affecting SPXS stock are largely tied to market volatility and economic factors. One major concern is the ongoing impact of inflation on the stock market. As inflation rates remain elevated, many investors are worried about the potential for a market downturn, which could drive more interest in inverse ETFs like SPXS. Additionally, the Federal Reserve's recent decisions on interest rates have contributed to market uncertainty, with some fearing that higher rates could slow down economic growth. Another factor influencing SPXS's price is the performance of the S&P 500 itself. As the S&P 500 moves, SPXS tends to move in the opposite direction, amplified by its 3x leverage. This makes SPXS a popular tool for traders looking to make quick bets on market direction. However, it's essential to approach SPXS with caution, as its leveraged nature can lead to significant losses if not managed properly. The market's reaction to economic indicators and news events also plays a significant role in SPXS's price movements. For instance, any signs of economic weakness or market downturns can lead to increased buying of SPXS, driving its price up. Conversely, strong economic data or market rallies can lead to selling pressure on SPXS. When looking at current trends, it's clear that SPXS has been experiencing significant price swings in response to market conditions. Historically, SPXS has performed well during periods of market stress, such as during the 2020 pandemic-induced recession. However, its long-term performance has been challenging due to the compounding effect of its 3x leverage. Some experts believe that SPXS could see increased interest if the market continues to experience volatility. They argue that investors looking to hedge their portfolios or speculate on market declines will be drawn to SPXS and similar inverse ETFs. On the other hand, others are more bearish on SPXS, citing the risks associated with its leveraged nature and the potential for significant losses. From a technical analysis perspective, SPXS's chart shows a clear inverse relationship with the S&P 500. Recent price movements have been closely tied to the S&P 500's performance, with SPXS spiking during market downturns and declining during rallies. Many are keeping a close eye on SPXS, given its potential to provide protection during market downturns or to profit from market declines. However, the recent significant price movements in SPXS have raised questions about its future performance. One recent significant drop in SPXS occurred when the market experienced a sudden downturn, causing the stock to spike. Conversely, during a market rally, SPXS experienced a surprising recovery. The relationship between SPXS and the broader market is complex, and understanding these dynamics is crucial for making informed investment decisions. In summary, SPXS stock is currently experiencing significant attention due to market volatility and economic uncertainty. Key points discussed include its inverse relationship with the S&P 500, the impact of inflation and interest rates, and the potential for increased interest in inverse ETFs. If you have any thoughts on SPXS stock or how you're approaching the current market conditions, leave them in the comments below. Don't forget to subscribe for more updates on stocks like SPXS, and check out our channel for another related video on inverse ETFs.